This specific price pattern is flashing a major warning signal. Bitcoin is on a direct path towards $63,000. If you think the dip is over, you might want to see what the charts are actually telling us. Welcome back to the Block Analyst. I'm thrilled to have you here. Before we dive into the charts, if you're serious about navigating these markets with clarity, make sure to hit that subscribe button, smash the like button, and ring the notification bell. Your engagement helps us grow and keep bringing you this high-level analysis. Now, a quick but vital reminder. This video is for educational purposes only. I'm sharing my technical perspective. This is not financial or investment advice. Always do your own research before putting your capital at risk. In today's analysis, we are stripping away the noise. Many traders fail because they clutter their screens with dozens of lagging indicators. To be a pro, you need to keep it simple. We will focus on 3 of the most powerful tools in a trader's arsenal: Ichimoku Kinko Hyo, the RSI, Relative Strength Index, and classical chart patterns. However, remember this rule: never rely 100% on indicators. They are tools to help us build a case, not crystal balls. They provide confluence, but price action is king. First, let's look at the Ichimoku. This is our primary trend filter because it's a one-glance equilibrium chart. Many traders use it wrong. We aren't just looking for a cloud, we are looking for the Kumo twist and price-to-cloud relationship. When you look at the chart, the first thing you notice is that the price has dropped below the Kumo, the cloud. In professional trading, when price is below the cloud, we are officially in a bearish regime. Notice how the cloud ahead is turning red and thick. This represents a massive wall of resistance. Even if Bitcoin tries to bounce, it will face intense selling pressure at the $94,000 to $103,000 zone. Furthermore, the Tenkan, yellow line, and Kijin, red line, are sloping downwards, confirming that the short to medium-term momentum is firmly in the hands of the bears. Next, we move to the RSI, Relative Strength Index, to gauge the strength of this move. Look at the yellow trend line I've drawn on the RSI. For months, this line acted as a floor for momentum. However, we are now seeing a clear breakdown below this support. The RSI is currently sitting around 42, which is no man's land. It's not oversold yet, which means there's plenty of room for the price to continue falling before the market becomes exhausted. This lack of upward momentum supports our bearish thesis from the Ichimoku. In professional analysis, we look for why the RSI isn't making higher highs while the price tries to. This is bearish divergence. It tells us the engine of the move is running out of fuel. Currently, the RSI is not yet in the oversold territory, below 30. This suggests that the pain phase isn't over. We have a liquidity gap that needs to be filled, and momentum confirms there is more room to the downside. Now, let's focus on the most critical part, the bear flag. This is a continuation pattern, meaning it usually follows the direction of the previous crash. We notice the start of this pattern at the bottom of $80,000, followed by a bounce to $92,000. By connecting the low of $80,000 with the next low at $84,000 and duplicating that line to create a channel, we see the flag clearly. Here is the most important part you need to watch. Inside this channel, we will see the price fluctuate. It will go up and down. For example, the price could climb to the upper edge of the channel, reaching $100,000 or even $103,000. However, do not let this fool you. If the price remains inside these parallel lines, the danger is still very high because it means the market is respecting the bearish pattern. The trigger points. The downside: if you see the price breaking out of the bottom of the channel, this is where you must be extremely cautious. It's a signal to secure your positions because the trap has been sprung. The target: we determine this by drawing a line, the flagpole, from the peak to the start of the flag and projecting it from the breakout point. This gives us our technical target of $63,059. The invalidation: on the other hand, if you see the price breaking out from the upper edge of the channel and closing above it, then the bear flag is invalidated. In that case, you can ignore the pattern entirely, as the bearish thesis has failed. This remains a scenario based on current data, so always keep your eyes on the levels. To summarize, Ichimoku is bearish, RSI is breaking down, and we are trapped in a bear flag targeting 63K. Watch the channel edges carefully. What's your plan if we hit $63,000? Let me know in the comments. Don't forget to like and subscribe to the Block Analyst. Stay sharp, stay safe, and I'll see you in the next one.